Yes, sir. We can start now.
Yeah, just it is opening. The file is open. Okay. Do we have the audience?
We'll be getting the audience soon enough. So we can start now. We'll be getting the audience. I think they'll be joining soon enough.
Okay.
Yes, sir.
Without audience, actually, it's very difficult to. So let us start. So the topic for today is we'll discuss about the financial statements and their analysis by the different stakeholders of the financial statements. So first of all, there are two chapters for the boards. That is, one is on the financial statements, their format, and second one is how to analyze those financial statements. So we'll try to discuss both the chapters. uh, we'll start with the financial statements, how the financial statements are prepared, what is the format for them, and what the Companies Act 2013 says about the financial statements. So whenever we talk about the financial statements, basically financial statements are the end results of the entire accounting process. They're basically the final accounts of the entire accounting process. So, and financial statements, basically broadly, we talk about two financial statements, that is the balance sheet, also known as the statement of financial position, and secondly, the income statement or the statement of profit and loss of the company. So, as the name suggests, the statement, the balance sheet shows about the financial position of the company. That means how sound the company is in terms of its assets and in terms of its liabilities. What is the financial health of the company? And the profit and loss, the statement of profit and loss or the income statement basically talks about the financial performance or the operational efficiency of the company during that particular accounting period. So these are the two important financial statements. Whenever we talk about financial statements, as far as our course is concerned, or this particular chapter is concerned about the financial statements, we're basically concerned about these two statements only. That is the balance sheet, statement of balance sheet, and secondly, statement of profit and loss account. Now, let us discuss in brief, right? Because the topic today is the analysis of financial statements. So we'll get into detail of the analysis of financial statements. So let us discuss in brief what is the format. What is the format which has been specified by the Companies Act 2013 for preparation of the balance sheet and the profit and loss statement, right? So basically we talk about in the Companies Act 2013, there are two, there is schedule 3 which has two parts, that is part 1 and part 2. So part 1 talks about the format or form of balance sheet, and part 2 of the schedule 3 of the Companies Act 2013 talks about the format for income statement or statement of profit and loss. So let us see in brief what is the format, so that we can, then it will help us in analyzing these statements, right? So before analysis of the statement analysis, we need to understand what is the structure, what is the format of the balance sheet or statement of profit and loss. So the schedule part 1, schedule 3 of the Companies Act 2013 basically talks about the structure of the balance sheet, which is like this. So they basically three parts to balance sheet. As we know, the balance sheet equation is your total assets of the company is equal to total liabilities of the company and the equity, the total equity of the company. So there are three parts. One is the asset, one is the liability, and one is the equity. So again, there are three parts. It is shown in the vertical form. That is why it is known as a statement and not an account, right? It is not shown as an account. That means the debit and credit side, but it is shown as a statement in the vertical form. So it starts with the equity. The three parts: equity, assets, and liabilities. So first part is it starts with the equity and liabilities combined, right? Equities and liabilities, they're shown together. They're shown together, right? It starts with equity and then the liabilities, but they're clubbed together as equities and liabilities. So in equities, it shows the shareholders' funds. Shareholders' funds again includes three things, that is share capital, reserves and surplus, and money received against the share warrants. That is uh, basically that our syllabus covers share capital and reserves and surplus. The third point is beyond the scope of this particular uh, uh, syllabus. So secondly, other than shareholders funds, it also includes share application money pending allotment, and third and fourth part are non-current liabilities and current liabilities. So for equity you have shareholders funds and share application money pending allotment. These are part of your equity. And for liabilities, you have non-current liabilities, you have non-current liabilities and current liabilities. So there is a definition for non-current and current that we'll discuss in brief. So first of all, let us see the structure. So there are actually 4 points. They're basically 4 points. That is, one is shareholders fund. Secondly, share application money pending allotment. Third one is non-current liabilities, and fourth one is current liabilities. And second part is assets. Assets. So in assets you have only 2 parts, that is non-current assets and current assets, and there are further segregation, the different sub points under the current non-current assets and current assets, that has to be discussed in detail. But let us now focus on the structure so that we can discuss in detail the analysis part. So this is basically the structure of balance sheet, where you have equities and liabilities clubbed together. And second part is your assets. In equities, you have shareholders funds and share application money pending allotment. And in liabilities, you have non-current liabilities and current liabilities. In assets, you have two parts only, that is non-current assets and current assets. So this is the structure of the balance sheet, which has been specified by the Companies Act 2013 in the Schedule 3. Then secondly, we have profit and loss. We have this profit and loss statement of profit and loss. Let us go to the structure of statement of profit and loss.
Excuse me, sir. I think we can see only a folder screen. So can you just put in your PPT as well?
No, I'm not using PPT.
Like we can see only a folder screen, financial accounting 12. That's all. We can't see your other whatever you're trying to show.
So
The
you're not
PDF.
able to see the
PDF. Yes, sir.
material. Content
Yes.
is not able clear.
No, sir.
Oh. You are able to see only.
The folder screen, so the financial account 12 part 2. I think the folders can be seen. That's all.
All right. Just a minute.
Yes, sir. Yes, now it's visible. Yeah.
Visible.
Yes, sir.
Okay. So second statement is our statement of profit and loss. So let us discuss the structure of the statement of profit and loss. It is specified in part 2 of the schedule 3. Just a minute. Yeah. So this is the statement of profit and loss. It starts with the revenue from operations, which is also known as net sales of the company. Sales from the operations of the company. Then you have other income, which is not related to the operations of the company, but for example, income received from the investments, income received as a commission, right? So these are part of the other income. Then combinedly, they are total revenue, that is part 1 and part 2 combined, that is the total revenue of the company for that accounting year. And then you have expenses which are basically clubbed in, they are basically in 7 parts, right? So you have a cost of materials consumed, then you have stock purchase of stock in trade, any changes in the changes in uh, finished goods, inventories of finished goods, work in progress, and stock in trade, employee benefits, finance costs, and employee benefits, finance costs, depreciation, amortization expenses, other expenses, which are, and then you have total expenses. That is total of all these 7 parts. Then that is deducted from the total expenses are deducted from the total revenue so that we can get the profit before tax. So we'll get the profit before tax by deducting the total expenses from the total revenue part of the company for that accounting year. So this is profit before tax. On the profit before tax, you apply the tax and you get the profit after tax, which is the final figure of the income statement. So that is the simplest form of the profit and loss statement. In the book, it is basically certain other items have been specified which are beyond the scope of our study as far as 12th class is concerned. So you have a total revenue, then total expenses which are to be deducted from total revenue so that we can get the profit before tax, and then we apply the tax so that we can get the profit after tax, which is the final, or also called the bottom line of the statement, bottom line of the profit and loss statement. These are basically the structures of the balance sheet, structure of the statements, financial statements. Now let us go to the analysis part, how we analyze these statements. So we'll are, are you able to see the screen?
Only the folder, sir. I'm not able to see the PDF now.
Acha, now you're not able to. Now it is clear?
Yes, sir.
Yeah. So this part we discuss the analysis of financial statement. Now, first of all, what do we mean by the analysis of financial statements? Basically, financial statement analysis means, as you have, the financial statements are the final accounts of the accounting process. So when we analyze those financial statements, that means the financial information which is contained in the financial statements. When we analyze the financial information contained in the financial statements, so as to understand and make economic decisions, that is the analysis. You have the financial statements, balance, that is the balance sheet, and statement of profit and loss, which are basically the final results of your accounting process. And when you use this financial information, so as to make economic decisions, that is basically known as the analysis of financial statements. So we have certain terms. For example, when we analyze the financial statements, we call them there are two types of analysis. One is inter-firm, which is also known as inter-firm analysis, which is basically cross-sectional analysis, which is cross-sectional analysis. Inter-firm is the cross-sectional analysis, where we analyze the different companies from the same sector, right? Different companies from the same sector. For example, the two companies working in the automobile sector, when we compare their financial results, we're basically doing cross-sectional analysis or inter-firm analysis, right? Secondly, we have intra-firm. That means within firm, we analyze the information over different period of time. It is also known as time series analysis, intra-firm analysis, or time series analysis, where we analyze the financial information of the same company over different periods, right? So that is intra-firm analysis. So that basically broadly two types of financial analysis which are done. And also we have internal analysis, another classification or of financial analysis in terms of internal analysis and external analysis. So we have internal analysis is basically done by the people who are part of the company, like the managers, like the shareholders, right? Insiders, when they are doing the analysis of their own company, this is known as internal analysis. When the outsiders are doing the analysis of the company, that is known as external analysis. So outsiders can be your creditors, your lenders, bankers, trade unions, right? Government, any other agency which is outside the company, when it is analyzing the financial information or results of the company, that is known as external analysis, right? So these are two different types of uh, analysis in terms of different categories. For example, you have internal and external analysis, then you have intra-firm and inter-firm, or cross-sectional and time series analysis, financial analysis. Now, and the financial analysis is basically that is done by a uh, number of entities, number of stakeholders, like financial manager or management, top management of the company, who are insiders to the company. They do the financial analysis. Then you have investors, the prospective investors, shareholders, then you have government, you have researchers, data analysts, they do financial analysis. You have suppliers, lenders. So different people who are doing the financial analysis of the company, and it is useful for them as a tool. Then we'll focus on the tools of financial analysis. In this particular class, we focus on the tools of financial analysis. That is, what are the different tools uh, for doing the financial analysis. So our course talks about four tools, that is comparative statements, the common size statements, secondly is common size statements, you have ratio analysis, and you have cash flow statements. statements. These are the 4 tools which have been discussed and are part of our syllabus. And today we'll discuss the first uh, two tools, that is comparative statements, which is also known as horizontal analysis, and common size statements, which is also known as vertical analysis. So let us see what is comparative, what are comparative statements and what are common size statements for understanding the financial analysis of companies. So let us first understand what a comparative statement. For example, you are comparing, comparative as the name suggests is basically comparing over a different period of time, right? Comparisons made over a different period of time. So you have, for example, you have got marks in a particular subject. For example, in English, you have scored in 10th, in 11th, in 12th, you have taken English and you have scored different marks in all the classes, 10th, 11th, and 12th. So when you are comparing the marks in 10th with 11th and 12th, that is basically in one particular subject, that is basically the comparative analysis or the horizontal analysis. That is known as comparative analysis. But if you are comparing the marks of the same of different subjects in the same year, that is the common size analysis. So this is a simple example to understand what a comparative and common size statements. When you are comparing the marks of one subject over different years, that is your horizontal or comparative analysis. And when you are comparing the marks of different subjects in the same year, that is known as your common size analysis statement. So now let us see comparative statements. So you have, in comparative statements, you have comparative statements of balance sheet and comparative statement of profit and loss, both. And if we see that the weightage of comparative statement of profit and loss is very high in our exams. If we see around 80% probability of the question is basically the question coming from comparative statement of profit and loss account. So that is very important part. There'll be one question on this. So let us see how the balance sheet is. In case of balance sheet, how the comparative analysis statements are done. So let us first of all do for the profit and loss statement, which is a very important part in our. So this will be the question which will be given to you. This is the question. It will come in this format, the particulars and 2 years. That is the previous year and the current year. Certain information is given, like revenue from operations, the other income, the expenses and the total. This information is given to you. This information is given to you. Now, how to arrange this information and analyze this information, that is to be seen. So what we need to do is we need to just put the information for the 2 years in a particular format. That means we need to arrange the information which has been given to us. That is, we'll start with the revenue formation, and this is basically as per the format of the statement of profit and loss. So we'll start with the revenue from operations, then we have other income, then we have total revenue. This is the format of statement of profit and loss. Then we have less expenses, and then you have profit before tax. When you apply the tax, then you get the profit after tax. So what you need to do is, for the 2 years, you need to arrange the information. Just you need to rewrite the information from the given information in this particular format. So this is the previous year. First year is the previous year. Second year is the current year. When we arrange the information in this particular format, and then we can write absolute change and percentage change. Two columns, one for absolute change and second for percentage change. Absolute change is basically, if we say the information for the previous year is A, and information for the current year is B, then absolute change is basically B minus A. Whatever information is given in the column B is to be subtracted, information given in A is to be subtracted from information given in B to get the absolute change. That means B minus A. So if we say absolute change is C, then C is equal to B minus A. So then we'll get, for example, if we have 75,000, here we have 75,000 and 60,000. So if we subtract 60,000 from 75,000, we get 15,000. We get, sorry, this is 60 lakh and 75 lakh. So you get 15 lakh. You get 15 lakh. So that is in absolute terms. That is absolute change. Absolute change. And then you calculate the percentage change. Percentage change. How we calculate the percentage change is by, if we say the absolute change is C, then percentage changes C divided by A into 100. C divided, that means absolute change divided by the information given for previous year into 100. That is 20. So it will be 15 lakh divided by your 60 lakh. That is your 25,000. 25 percentage. So percentage change is 25. So then we do for all the different these items which are given in the profit and loss statement, so as to get the complete absolute changes and all the percentage changes. So this analysis where we're comparing 2 years, that means current year, previous year and current year, and finding how much changes has occurred in 1 year is basically the comparative statements. So here we have done comparative statement analysis for statement of profit and loss. Then secondly, and this is the most important part in the syllabus, 80% probability of one question. That means only one question will be asked from this chapter, and that will be 80% chances of preparing the comparative statement of profit and loss. Then you have balance sheet. How to prepare the comparative statement for balance sheet? So information is given in this particular format that we have discussed, how balance sheet is structured. What we need to do is 2-year information is given, that is previous year and current year. So what we need to do is we need to just use this information in the same format. This is the information which is given for the current year, for the previous year and the current year. And we need to subtract the information for the previous year from the current year to get the absolute change. And then we need to divide absolute change with the previous year information so as to get the percentage change. So this is 20 minus 15 is your 5. That is the absolute change which has occurred in the share capital of the company. And now this information is just rewritten from the given information. There is no logic or rocket science behind it. We have just reused the information which has been given to us. And then what we are doing is we are subtracting the current year information, previous year information from the current year information. That is 20 minus 15 is 5. And then this is absolute change. And then when we divide 5 by the previous year information, that is 15, we get the percentage change. So how much change has occurred in the share capital over the last 1 year is 33.33 percentage. So we need to prepare the comparative statement for balance sheet using this information. So for all the items, it is done in the similar fashion. For different all the items, it is done like that. So this is very simple comparative statements where we use the information for 2 years to compare the company's information over the 2 years. And it is also known as horizontal analysis, since we are comparing the company's information over 2 different years. Then we have common size analysis. Second part is common size statements. Now, what are common size statements? Also known as vertical analysis, where what we are doing is we are just analyzing the information of the same year and different items of the same year. For example, this information of the profit and statement of profit and loss is given to you. Illustration 5, the information is given to you. What you need to do is you need to just put this information in this particular format. That is the format of statement of profit and loss. So you'll write the information, revenue from operations, cost of goods sold, then you get the gross profit, then you subtract the operating expenses to get the operating income, and then our non-operating expenses also subtracted to get the profit. So when we arrange the information for the 2 years, information is given for the 2 years, but we are not comparing both the years. What we are comparing is we are comparing different items over the same year, right? Yes, information is given for 2 years, but we are not comparing the 2-year information, but we are comparing different items over the same year. So what you need to write is you need to write the absolute amount, and first absolute amounts, which is to be just rewritten from the given information. Nothing special about it. Just rewrite the information. And then secondly, for the 2 years, you have rewritten the information which is given to you. And then secondly, what you do is you find the percentage. You find the percentage of what? Percentage of revenue from operations or net sales. Whatever information, for example, your 25,000 is given for the previous year, and 25 lakh and 18 lakh are given for previous year and current year revenue from operations. So what you need to do is you need to divide by revenue from operations. So when you divide revenue from operations, it is going to be 100%, right? It will be 100%. And all the items have to be divided by revenue from operations. So for example, here you divide 12 lakh by revenue from operations is 25 lakh. So 12 lakh by 25 lakh is your 48%. And when you divide 10 lakh by 18 lakh, it is your 55.56%. So different items have to be divided by the revenue from operations, so as to we can find out what is the weightage of that particular item in comparison to revenue from operations. What percentage of that, what percentage is that particular item in the entire revenue from operations? That will show. That is why we call it vertical analysis. What we are doing is vertically we are comparing different items as part of revenue from operations. We are not comparing the for 2 years. So again, for different items, if you do, you will get the percentages for of net sales for different items. So that is your common size income statement for profit and common size statement of profit and loss or income statement. Then you have, lastly, you have balance sheet, common size for balance sheet. And that is again, for 2 years, you have got the information. So you need to rewrite, you need to rewrite the information in this particular format. The absolute amounts for the current year and the previous year, and then find as a percentage of, in profit and loss statement, it was revenue from operations, the percentage of net sales or revenue from operations. Here it is percentage of total assets, percentage of total assets. So for example, you have 12 lakh, you have 15 lakh. So you divide 12 lakh by percentage of total asset, that is 32 lakh 50,000. So that is your 38%, 30 percentage, 36.93 percentage. When you divide 15 lakh by 41,000, 41 lakh 50,000, you get 36.14 percentage. So in this fashion, you can find out for different items how much is the percentage for different items in comparison to the total assets. And similarly for the assets part, this is for equity and liability part, then you do it for assets part also, so as to find out the percentage of total assets. Different items as a percentage of total assets. This is again showing what is the weightage of different items, weightage of different items as in the total assets of the company. For example, your share capital is 36 percentage, 36.16 percentage in the year 2016, closing 2016, of 36.14 percentage of the total assets. So what we are doing is we are doing comparing vertically. That means we are doing vertical analysis. Common size statement are also known as statement of vertical analysis. So these are the two statements. These are the two tools which are used for financial analysis. The other two tools are ratio analysis and the cash flow statement, which are again different chapters in our book and which are discussed separately. So as far as these two chapters which we have discussed, that is financial statements and analysis of financial statements, these are basically around 7 to 8 marks in our total in our final paper, and there'll be one question either from the comparative statements or common size statements, and the high probability is that comparative statements of profit and loss, statement of profit and loss will be there. One question, and one question, theoretical question from say chapter of financial statements, which will be concerned with the structure of financial statements. And the ratio analysis and cash flow statements are different chapters altogether. So overall, the total financial analysis consists of 20 marks paper in the 20 marks in the final paper. Out of that, these two chapters that we have discussed consist of 7 marks in the paper. So thank you very much. That is from my side. And any queries you have, anything you want to ask, you can write to me, and I'll try to answer those queries to the best of my knowledge. Thank you very much. Thanks a lot.